Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking the commitment of traders, which is the COT data. So what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing and rejecting a quite strong level of monthly demand and support. From here, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, tested and rejected, and we can see how just last month the market tested once again this zone, started rejecting it to the upside, and in a situation like this we could expect more bullish price action to be created away from this zone. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, it is quite clear that we have a market which is currently breaking structure to the upside. In fact, this zone was acting as previous weekly resistance here, again here, again here. However, now that the market has broken above the zone, all this previous resistance is now turned support. And we can see, in fact, how the market is testing it and rejecting it to the upside quite aggressively. So also here on the weekly, more bullish price action could be created away from the area after a potential retest of the zone. Going down on the daily time frame, what do we see? Now here on the daily, this is where things are starting to get quite interesting. In fact, it is quite clear how the market was moving in a range. I did speak about GBPUSD while the market was in this range. And I also spoke about GBPUSD a few days ago after the market had created this impulse. I explained all the reasons for which we could expect first this correction and then more bullish continuation. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, as the market is breaking above this resistance, we can see how this impulse could be followed by a correction since the market just broke this very important structure. This zone, in fact, was acting as previous daily resistance here, again here, again here, and now that the market is breaking above it, all this previous resistance will be turned support here. So what we could expect is a retest of this previous daily resistance turned support before then getting a potential rejection to the upside. Now, if we have an impulse and we want to measure the potential correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.382 Fibonacci retracement lining up exactly here that we could expect this market to test and then potentially to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we can first of all notice that if we're checking a pound, we're actually already checking GBPUSD because all currencies on the spot are traded against the USD. So if you're checking the data for the GBP, you are actually already checking GBPUSD. And what we can see is that net positions went from minus 24k net positions all the way up to plus 1.3k net positions, with 53k longs compared to 52k shorts, while here, when we were having minus 24k, we had way more shorts than longs, 52k shorts compared to only 28k longs. So we can see clearly how longs are getting increased from an institutional perspective on the pound, making the pound stronger, so making GBPUSD stronger. Therefore, more bullish continuation could be expected in a situation like this. And in fact, if you remember, I was speaking about GBPUSD while the market was in this range, explaining other reasons for which a rejection and break above the range was definitely possible. So now that we're getting that break, if we will have the retest, potentially also with students, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have the possibility to gain lifetime access to the mentorship program with a huge upfront discount from $497 all the way down to only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you have an account with them after you join the mentorship program from your student dashboard, you can get a full refund credited back into your trading account if essentially you move your trading to their platform. And if you scroll lower, you will see that there is still time to join before the timer goes to 0 and this offer expires. And you can join directly from here by clicking on this button in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.